Hey guys and gals, how you doing? This is Dr. Greg McLeod from the Elite Traders University. So good to be with you here. We're going to do our post-NFP report that's going to give us a forecast, the weekly Forex forecast for this upcoming week starting July 6, 2026. And I'm going to go ahead and share my screen with you. I tried to do it last week. I guess it was the screen that left the lens cap on. You know how that goes. Got to redo it again, all right? So again, it's brought to you by the Elite Traders University. And there we go. And speaker, we got the speaker there. Force everyone to this view. And good. Okay. Welcome. Okay. Welcome to Bulls versus Bears, a strategic global outlook. My name is Dr. Greg McLeod. So good to be with you here. And we're going to go, before we get started, I want to go ahead and direct your attention to the risk disclosure on your screen. So you make sure you understand all the risks associated with foreign exchange trading. And I'm one of the foremost authorities of short-term day trading called scalping. I've also developed several systems, including the Samurai Sword, the Pip and Run strategy, and I used to be a former Wall Street currency analyst at one of the world's largest Forex broker-dealers in the world. And my information, I traded traders and coaches. I was a trader coach, trader mentor, and I also was on the floor of the exchange. So I have a lot of experience, 30 years, never a dull moment. And they say that if you enjoy what you do for work, you never work a day in your life, and that is true. And so I'm so glad that you decided to join me today, okay? Also wrote a book called The Gold Rush Blueprint. You be able to get a copy of that at that link there. And that's our agenda. We're going to go through the dollar index, euro dollar, pound dollar, Aussie dollar, dollar yen, dollar CAD. These are affectionately known as the majors. We're also going to look at gold, silver, oil, the S&P 500, and Bitcoin. But we're going to look at some economic news first to top us off. We're going to go to one of my favorite tools for finding about economic news. This is my market heat map. My market heat map is an arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, and what's not in the market. And I'm going to go ahead and share that with you. You can come over if you're watching this on YouTube. You can go to my market heat map and actually have access to it for free. You actually can scroll down. Normally, it's $19.99 a month. If you join our school community, you get to access it for free. And I'll show you how to do that as well. You get one of 6 powerful heat maps on the front. Pound dollars in the top spot, up 1.17%, followed by Kiwi dollar, up 0.96%. Aussie dollar up 0.61, euro dollar, dollar yen is up as well. And so we can look there. We see what's hopping, what's popping, what's dropping, what's not. Green's an uptrend, red's in a downtrend, and gray stay away. Okay. On the front, you're also going to find the economic calendar. Click show more in order to kickstart it. I may have to refresh the screen. And we're just going to look at the high impact items. High impact news usually impacts the currencies, and currencies are actually moving ahead of time, ahead of those things. So let me go ahead and refresh this. Apparently, I just went to and okay. I hope you guys had a great 4th of July, great Independence Day. We had wonderful fireworks, and celebrating America's 250th. I hope you guys had plenty of hot dogs and barbecue and some fireworks. I know we did over here in Las Vegas, and we had a great show here as well. From all the casinos, they were launching fireworks in the air. Anyway, let's get right to it. Monday, July 6th, we have unemployment data out of Switzerland. Previous number 3%, forecast calls for 3%. ISM services PMI comes out 7 hours later at 10 o'clock for the 10 o'clock news cycle. ISM stands as the PMI stands for Purchasing Managers Index. We're looking for our drop from 54.5 to 54.2. Then we have tomorrow, July 7th, we're going to have the Canada news IV PMI. It's supposed to rise from 58.2 to 59. And then we're going to go into later on that day, we're going to go look at the New Zealand dollar. And we have a very big announcement, the RBNZ interest rate announcement. The decision, previous number was 2.25%, and it's widely expected for them to raise rates 25 basis points to 2.5%. And usually when currencies raise interest rates, it makes the value of the currency go higher. Okay, so we have that announcement coming up on July 7th at 10 p.m. Eastern time, and so we're probably gonna be trading that during our Samurai Sword $50,000 to $50,000 trading challenge, and I'll tell you more about that at the end. FOMC minutes come out Wednesday. Usually it comes about 2 p.m. Eastern time, which usually makes the market kind of dead ahead of time. FOMC stands for Federal Open Market Committee, and it's going to decide the interest. You're going to talk about the rationale, the reasons why, the meeting notes of why they kept rates unchanged. And then you're going to have Chinese data, inflation rate year on year is supposed to keep out steady at 1.2%. Why do we follow the Chinese currency even though we don't trade China? It's because that China is one of the largest trading partners for New Zealand and Australia. And when China does well, Australia and New Zealand do well. China catches a cold. These countries catch the flu, guys. No, okay. Thursday, July 9th, happy birthday to my dad. Dad is alive and kicking. Awesome. And it's his birthday, July 9th. But we're going to have European data coming out. This is going to be balance of trade. 14.5 billion, supposed to drop to 14 billion, probably due to higher tariffs. At 8:30 a.m., we're also going to have initial jobless claims out of the U.S. Supposed to rise from 215,000 to 219,000. This is widely expected because July, it's summertime. A lot of people, they go on vacation or they quit their summer jobs, right? Existing home sales comes out at 10 o'clock as well. 4.17 million, supposed to rise to 4.2 million. Existing home sales, a big number, because when people buy houses, they got to buy carpeting, they got to buy furniture. I know I bought a house, it needed everything. And so when someone buys a house, it's a big boost to the economy, right? For people who repair things, for appliance salespeople, for painters, for furniture salespeople, whole bunch of stuff. So existing home sales could produce a big demand for the economy. Friday, we're going to round it off Friday, July 10th. We're going to have Canadian data, lots of Canadian data. So we're going to be trading the Canadian dollar. Look at the flag. The flag tells you what to trade, right? So we're going to look at dollar CAD, we're going to use CAD yen or CAD Swiss. During that time, these are the kind of currencies we want to trade. The flags tell us what to trade, right? News creates a ripple effect in the market and causes currencies to move up and down, provides the volatility, which gives us the ability to make money, right? So that is it. We'll see. I'm going to scroll down anything more. Nope. That's it. We have the unemployment rate, participation rate, supposed to drop from 88,000 to 10,000. That'll be bad for the Canadian economy. Could make the Canadian dollar weaker versus other major currencies. We also have participation rate 65%, rising to 65.2%, which would be a mixed positive. But the unemployment rate stands at 6.6%. 6.6% of Canadians are unemployed, and that's probably more weakness for the Canadian dollar. Okay, so let's go ahead and get to the charts. I know you guys are like, these are fundamentals, and you guys like fundamentals are not so much fun, fundamentals, right? Are they just mental, right? So let's go ahead and go to the charts here, and we're looking at the opening range breakout charts here that we're looking at, right? And so here we go. We have this is our Samurai Sword, our opening range breakout strategy, where we get in these trades at these breakout points, and they give us a huge profit, right? We just had one on gold, where we actually our Samurai Sword. We had a double top inside the Samurai Sword, the rectangle breakout. Look at that tight entry right there. Stop just above the high, and we were able to pick up $30 right there on 1 unit of the gold. So that was a pretty good gain there, right? But let's get to the charts there. I'm going to go to my bulls versus bears setup. Oh, and we're going to change some settings here. Settings. Okay, we're gonna get rid of our execution marks and all that stuff, right? Right. Profit and loss and all that. Positions and trades and buy and sell buttons. We can get rid of all that. Oh, and execution marks. Yeah, we take a lot of trades, right? And we're gonna get rid of Mr. Sword. Goodbye, Mr. Sword. Okay, so we're gonna go out to the high time frames. While I like teaching, and what I teach my students is to go out to the bigger time frames to get that 50,000 foot view, get that big view of the market. That way, they're just like we have drones and satellites. Whoever controls the high ground controls the battle, right? So we want to control the high ground. So we want to see what's going on here. This is gold. And we can see that from that long wick has been going down, 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 down. Each bar represents 1 month or 30 days of chart data. So 30, 60, 90, 120 days, gold has been going down from an all-time high of 5,589. We dropped all the way down to a low of 3,953, rebounded, now a dead cat bounce at 4,059. So this is telling us that we don't want to buy gold, right? And because why? Because the charts tell, even though all the pundits, all the commercials you see, buy gold, buy gold, buy gold. And gold is an inflation hedge. And if there's no inflation, what do you have to hedge, right? There's nothing to hedge. In fact, gold costs money. If you try to move it, you gotta ship it, you gotta store it, you gotta pay for security, you gotta pay for insurance. Gold costs money to hold on to, right? But if you get into the stocks or real estate, these things pay a dividend or pay a rental, or they pay for themselves. They give an ROI that is, when inflation is low, then we want those type of assets, those assets that throw off money, not that take in money, right? Only if inflation is greater than the carrying cost of gold does it make sense to have gold. Like all this time when we had inflation under the previous administration, we had a lot of inflation, almost 9% inflation. That's why gold was so high. But now that inflation is coming down more toward the 2% Fed target, well, then who needs gold, right? So we can see, so this from the chart, from the 50,000 foot view, we can take short-term shots in the market like we did here, right? This is a short-term chart. It's a 30-minute chart. Samurai sword break, south side break, boom. We got an entry, perfect trade, right? Let's drop down to the weekly chart. And we can see big moves down on the weekly chart. We had a level of support that we broke, but we're hanging around there. And so, it's still, long wicks penetrating, but not closing. We need to see a close below probably 39,816, probably opens up 31.23, right? But we're finding a lot of support. We're not making any new. We made a few new lows, and we bounced back. That's kind of a reversal pattern right there, a harami, a hammer, a harami. All right, that's on a weekly chart. Let's go to a daily chart, and we can see, there we go. Price breaks down below, is surging up. We do have a nascent uptrend, right? It could be a rebound in an overall downtrend. We'll take Fibs from the old high. Oh, no. Old high. Down to the low. And we could conceivably, there's a 200 simple moving average at the 23% retracement, 4,339, right? Possibly there is some bullish up move there, right? But we are retracing in a downtrend, right? So if you're on your phone, wow, looks like it's going up. But if you look from the higher time frame from this daily, you probably don't want to buy that, right? And here is the 4 hour. And in the 4 hour, we're inside that candle, right? But we do have this rising trend line, right? So once the price bounces off that trend line, we could see some bullish action unless we see a break, right? So we really want to see, we wait for some levels here. We want to see a break above 4204. However, if we break the trend line, we could come back to 4118, right? I really don't like going against this is the 200 simple moving average. The 200 is very important because there's 200 trading days in the year. That's like the report card. And right now, this is below like fail D level, right? So maybe you could scalp it higher, but this thing could break and keep going lower. So I'm going to go with a higher time frame trend. If you are risky, you want to run in front of traffic to grab a nickel or two, it could be, let's drop it down to a 2 hour chart. Yeah, I'm still bearish this year. So it's bearish. Greg says, Dr. Craig says, bulls versus bear, we are bearish. All right. Let's go on to the next. We spent a lot of time on gold. And I don't know why, because usually we start with the dollar index, right? So let's go ahead and go to the dollar index, the Dixie, the DXY. Once you understand the dollar index, you understand the major currency pairs, right? And you can see that as long as we are, in fact, I drew this last time. You know why? Because I did this before, but I had the lens cap on, and so nobody saw what I was talking about, right? And that's fine. I get to do this again. So we have lots of support in the 96, 95 area. And then we can see that we bounced from that support zone, the 200 SIP moving average. Again, the report card of price is the 200. We bounced off the 200, and we're moving higher, moving on up. Like George and Wheezy, we can see the 106.00 area coming into focus, coming into play. That's a monthly chart, though, right? Let's break it down. Break it down. All right. Now we're seeing some, a little stress here. The dollar's rallying on a Sunday, Monday, and sometimes we have Sunday, Monday, low volume, holiday volume, probably going to have some hangover, people getting hangovers, Monday might not even show up to work. And so we have turnaround Tuesday, might be turnaround Wednesday. So we might continue to go up, but we do have a level of resistance right back here that we had a high of May 5th. May 5th around 102.01 area. We're currently at 101, so about 100 pips. That's the weekly chart. Let's scale it down there. And the trend is up, higher highs and higher lows, right? And it's a pretty strong one. And we probably could go start moving back up, right? Bulls versus bears. I'm going to go to a 4-hour chart, and we can see that we do have this long trend. If we break the 200 at the 143 zone, we could probably see a farther move down. But right now, we have higher highs, higher swing highs, and higher swing lows. This is an uptrend until the trend is broken. So bulls versus bears, we are bullish. Okay, let's keep going. Let's keep it spicy. Let's go to the anti-dollar. Anti-dollar is the euro, and I'm actually in a trade in the euro. I don't know what it's doing. But let's go ahead and remove all the drawings here. Right. I think I think we're up like $4.70 or something. I can see it over here on this screen here. Let me go ahead and close this up and get this close to the edge, close to the edit. All right, and this is the so you can see that we go out to this actually monthly view. And this is the monthly that we do have the we want to look lots of chart data. My mentor Robert Deal would say you gotta have lots of chart data. See what this thing is doing over a long. This is from 1983. I was in high school, and that one back then, right? Then we had this low in the year. Well, Greg, the euro didn't start trading until 1999, which is true, but it was traded electronically as the ECU, the European Currency Unit. So they were planning on doing this back in 71, and they have an electronic tracking to show where it would be based on all the value of all the other currencies back in the day. They had the Spanish peseta, and they had the French franc, and they had the other countries that Italian currency, the lira, right? And so they tracked it, and then they finally released it in 99, and that's actually where, as soon as they released it in 99, it just collapsed, right? This is 1999, right? This is 1998, this is 1999, and the first thing he did was drop. So people had no belief in the euro when it first came out, all right? And they had a lot of belief, and then it dropped again. So we do have a rising trend channel, right? We do have a rising trend channel, but the current trend, you connect these swing lows, this is going down, right? So we're basically in this bearish formation. And we have support coming in around probably about the 101, 102 area, right? Price rally, then we could come back to this 97 area, really, right? And that would touch this level, and maybe if we get to this level, we bounce back again over time. But right now, each bar is 1 month, so don't hold your breath on that one, right? So we only can trade what we see, right? And right now we have a head and shoulders pattern, very clear. Head and shoulders a bearish chart pattern. Now, if you sign up for our free school community, we have a whole video section devoted to chart patterns, candlestick patterns, all the fundamentals and the basics. The Forex Foundations course is available on school, and you can reach that in our school community, right? So here we go. This is the head and shoulders, the bearish pattern. Why? Because it tried 3 times to push up, and it made a lower low. And so we can see that we can have a bearish move down. Let's move it down to a daily chart, and we can see that we are just making these what we call bear flags. We have a flag pole, right? And we have these flags. And every flag, we're going down lower and lower. New flag pole, and then a new flag, right? These are upside down flags, okay? So then we have another flag pole. There's a really big pole, which means, it's setting up for probably a big drop. And we have, so if we see a break of this trend line, we can see another drop, right? We can actually clone this and take the measurement objective, take the measurement of that pole, right? And not pole dancer, don't get excited now. And then look for a break, right? And we can forecast a price target down into the 111.57 area. That's about it's like 1,000 pips away, huh? That's pretty good. All right. Well, we want to see a break, but let's see. Let's go down a 4-hour chart, right? And you can see that price broke through. Maybe I didn't draw it right, but let's say there. We get a break in this zone or this area here. This area comes in around, around the 113.96 area. So we start breaking 114 and start hitting the 113s. Then this is going to open up all kinds of support to retest, some retesting some levels. And once we break this last level over here, which was the low of June 24th, we break that low, then it's curtains. There's no space. It's just nothing going to hold this baby up. It's collapse, right? Now we break above the high. We break 114.74. The bulls can probably salvage this, but right now their backs are against the wall. Lots of red candles. We got bear flag. We can use Fibonacci projections. It's all going to come. It's going to try to look bullish and like, yeah, I'm going to try to buy it. It's like, yeah, buy this. I got something for you to buy. Up there you go. There's 100% expansion right there. Bam, right there, right. So cool. If you do a risk reward on that, we can go a little bit deeper on that to help you guys out. If we're looking for an entry and we are looking for a quantitative risk and reward, well, that is a pretty good risk reward ratio. That's a 2.69 to 1 risk reward ratio, right? If you get an entry there. Again, this is not a recommendation. I'm just showing you this is what we do with the samurai sword and finding razor entries into the market. Okay, let's go ahead. So bulls versus bears, we are bearish.
Don't buy.
Okay.
Sell.
Let's go ahead and go to the keep it moving, keeping spicy. Pound dollar, the pound dollar, and I think we're up on that. We're up $10, right? Let me settings. Okay, we can actually show positions and orders, right? Yeah, we're up about $10, right? $11.70. This is a samurai sword breakout. I can show you over here, right? And we can go like that, and we go to the like that, and go to the 5-minute. Oh, we just missed our exit too. We got short on the break. Retest of the samurai sword right there. There's our sword. Price rallied up and then dropped, and really came to $16.20. We're trying to risk $4.60. That's a 4-to-1 risk to reward ratio. I was a little greedy. I was trying to go for the full $20 and get 5-to-1. At this case, it's a 3-to-1 right now, almost $12, right? And I should take it, but I think we get one more push down, and I'll take a 4-to-1 right there, right? 4-to-1 risk to reward ratio, right? And That's the asymmetric trading. When we actually trade, we are looking to risk a little. $4 and $4, $3, $7, right? We risk 7 to make 20, right? So we're based on percentage gain. So I'm not gonna be this demo guy or this rich guy throwing around 30,000, 40,000 account. And I have done that, but I find out that most of my people got about $1,000 or $500 or $50 or $100. They got Greg. I mean, when my students came, they go, Greg, I got $100. What can you do for me? Yeah, you make millions all the time, but what are you going to do for me? I go, it's all about percentage. It's not about how big your account is or how much position size you can dig. It's pure percentage, right? And if you have $50, and one of my students who finished the challenge, and he made $300, and he's like, "Oh, I'm so disappointed, Greg." I go, "Why?" Because I didn't make 50,000. I'm trying to make the 50,000. It's a 50 to 50,000. I go, "What'd you start with?" $50. Well, how much did you make? 300. You made $300 out of $50, bro. That's 6 times. That's 600%. You can't go to the bank and get 600. Go to the bank and say, I'm going to give you $50. And when I come back next week, I better have $300 in my account. They will call security on your butt and send you to the insane asylum because a bank is not they're going to pay you 1% or 2% over a year. They're going to pay you $1.50. You kind of come back a year later, they're going to give you $1.50 and they're going to tax you on it too, right? And I'm saying when we trade using the hat samurai sword, which we use very small risk for a very big gain, then you can scale. We use our compounding spreadsheet, and we can actually start scaling our accounts, right? So that's what we do. Anyway, sorry to get on that, but and we're on the daily chart, right? Monthly chart. Monthly is looking interesting for the pound, right? Let me go ahead and get rid of these positions and stuff like that, right? Okay, right. This is the monthly of the British pound. It has a similar kind of head and shoulders pattern. It got close to the 200. Didn't really like the 200. Our oscillators are. Let me get rid of these oscillators. Okay, we do have a rising uptrend. Right, we still have a strong dollar, right? We do have a strong dollar, and this is the dollar overhang because remember we trade the British pound versus the U.S. dollar, right? We trade the British pound versus the U.S. dollar, and we can see that we have a downward trend line. We also have a rising trend channel that we look to that it may break soon, right? We're making some lower highs, and so basically we're looking for this area right here to break this little support that it's standing on, right? Like it's like a pirate, like walk the plank. And we'll walk the plank, we'll like push it off of it, right? And we look for a drop, right? To these levels. Once it breaks, when we've got the 120, 134. I think we get down to the 103.90, right? Why? Because we get this downtrend, and there's more red than green. That's why I use colors and shapes. Now we might get a little bit of a bounce. We got a little bit of a bounce, right? Double bottom. Get the double bottom crowd coming in. Hey, it's double bottom, and I'm going to buy it. Yeah, but you have overhead resistance coming in even on the intermediate trend. That's a downtrend. You project that out. When this thing rises, it's going to slam into that, right? It's going to slam into that, and then it's going to, usually, right? It's going to come up in that, and then right? So that's and so that would be a great place to short. You want to, like Snoop Dogg, and sell high. You want to sell high and buy back low. I want to sell it to somebody, some sucker you got to get out there. I'm going to sell it to you for 134.84, and then buy it back from you for like 129, right? Because you're going to be crying in your oatmeal when you hey, it's going to go up. Like, all right. That's what the market makers do. Oh, yeah, it's going up. Yeah, you want to buy this. Look at it. It's going up. Then you look on your phone, right? Because you can't see all this chart data. So you look at your phone and think it's an uptrend. And really, it's a trap, right? So bulls versus bears. I'm already looking. The strong dollar already tells me that, short term, this is going to be bullish. But medium and long term, later on this week, this thing breaks and goes lower. So I'm bearish. Okay. But even though I'm a little short-term bullish, right? Okay. Let's go ahead and move on to the next currency pair or the next thing. We did euro. We did. Let's get over to dollar cat. I love dollar cat. Oh my god! If I had a dog, I would name him Cat, right? Because you get the trend like that. Boom! It's like, oh, just break out from just break out from like you got this like this, right? And it broke out, right? So you got this really cool breakout, right? And it's just running, right? Because why? It's been stuck in a range for like years, right? For 3 years, it's been stuck in this range. It broke out, got pulled back down, but now it's breaking out. It's a dollar pair. The U.S. economy is stronger. Canada's having its own internal problems. Alberta wants to break away. There's not a lot of faith in the government, and so the dollar is beaten up on the CAD, right? So we look at the weekly chart, we can see we get a nice uptrend. Each bar is 1 week. It's been week after week after week of gains of gains, and we just broke from a support zone right here where we had a little range, that the range box, a weekly range box, and we just broke. Our next stop would be the next swing high, about 148.03, and that's 600 pips away, guys. 600 pips. So this trend could continue to the north side, and you get carry interest for being long the currency pair with a higher interest rate, and the U.S. has a higher interest rate than Canada. So here's a trend: higher highs, daily chart, higher highs and higher lows. We also broke some intermediate resistance in the 139.46 area. We broke this area. That was a high of April 2026, and we broke again. We broke above that on June 10th, and so we've been moving sideways, moving up, and now we're moving sideways. So this thing hasn't even moved. It's up right now, right? It's up right now, and it's only moving sideways, and it's up, right? Just this little part being up. Look at the 4-hour chart. You can see that we are trending up, right? Right? Is this coiling, getting steady? 2-hour chart, right? And there's a 1-hour chart. Bulls versus bears, just real simple. I'm bullish. Bye, bye, bye. Right, okay. Let's go ahead, get to the next thing. Let's go ahead and move on to the dollar yen. Dollar yen is on fire. Oh my goodness, it's broken out to new highs, and the Bank of Japan is powerless to stop it. It's just because why? It's in a massive up. I mean, it wasn't a downtrend, right? He said, well, Greg, it's a downtrend. Yeah, but that downtrend got crushed. Got the trend line. You have this trend line here, right there. We broke that, and it's been higher highs and higher lows. That's 2013, and now we've been moving straight up, right? And this, there's a gap down here that has to be filled because nature abhors a vacuum, and we have a vacuum of price of 1984. And I remember because I actually got a little Japanese car, and there was like some type of an embargo or something on the Japanese cars, and then all the cars went up like $1,000 or $2,000. It's like, you want to get that Honda? Is like all of a sudden was higher. Why? Because the currency was a currency fluctuation, right? So, but guess what? 40 years later, we are going to see a massive revaluation. All that drop from intervention from the past is going to catch back up and bite Japan and make their currency super weak. They've been trying forever to try to use intervention to strengthen their currency, but now it's going to get super weak. And so usually we have the law of symmetry, where if we have a big sharp move to the downside, right? This big sharp move to the downside, we usually have a big sharp move to the upside to fill that gap, right? And they keep, and that's why they're dumping $35 billion to buy their currency back, basically burn, almost like they do in crypto, where they burn the tokens. They're burning yen in order to to reduce the amount of currency on the market, to cause the value to go up, because they don't want it to enter this zone. This is like the edge of. This is the edge of. They're on the edge. This is it. Once they cross 163, it's over, guys. We're gonna probably hear. You're here in the news that Japan has 200% debt to GDP ratio, and that's gonna be massive. A massive currency time bomb that's going to happen. The next black swan is going to be the collapse of the yen. And, they've been trying to fight it. And I'll show you the lower time frames what's been going on. Here's our weekly. We'll drop down to our daily chart. And all these sharp moves is the Bank of Japan trying to fight. It's a $7 trillion market. You throw 35 billion of it and it only moves the market for 5 minutes. You are fighting a massive. See that intervention, and look, as soon as it turned, well, actually it lasted again. It gave 12 hours. It did a U-turn, right? But I'll go to lower time frames and you can see how they've tried to sell their currency. See all these wicks? They've been trying to stop it. You're like, it's like being pulled into the abyss, and they're just trying to hold it back, right? Trying to hold it back, right? It reached over, it pulled, and it's coming right back, and it's huge, right? Especially because their interest rate's 0.7%, right? And the U.S. is like 3.25 or 3.75. The interest rate differential favors the dollar. Your long dollar, you're gonna get paid interest. So there's interest for holding that. I mean, that's our opening break. That's our samurai sword. We got long there and it broke out, right? So it is, and they're gonna probably try to intervene again. They're gonna try to push it down, but eventually they're gonna run out of firepower and they're just gonna have to let this thing go, right? They're gonna have to probably call in the global monetary authorities to intervene and to buy yen in order to keep it from sliding into this 40-year zone of nothingness. I mean, it gaps up to 200. It stands to be one of the biggest, one of my favorite trades. It's risky because they intervene. They start pushing this thing down 200 or 300 pips, but then boom, right? You're there to buy the bottoms, right? So bulls versus bears, I am strongly bullish. Dollar yen, and like sell yen, but buy dollar. Sell. Let's go ahead and go across the ocean there to Australia. Take a quick look see there. Monthly chart. Always start the higher time frame, and that way we can get a big 50,000 foot view, a satellite view of what's going on in the market, and we can see we had higher highs and higher lows. We had a nice uptrend, right? However, the uptrend broke, right? We had inside day spinning top candle against the 200 SIP moving average and against this really long downtrend, right? There you go, right? We haven't seen, this is the high of 1974, and it was like a double top there, right? And then now we're pushing against, all kinds of support right here in the 0.6042 area. And they try to hold it. It came back down. They try to hold it. They try to, right? And now we're in this descending triangle kind of pattern. And the next level of support is way down here. 48.77. That's a 1,200 pip drop. There's a gap. A big cavern gap. There's no other price action, no other wicks or anything support. There is one. There's one right there. 55.22. It's still, 500 pips away, right? So once this thing breaks the low, there's 500 pip drop, and there's another 700 pip drop after that, right? So it's against the wall. It's fighting against the wall. They're trying their best to try to keep it afloat, but the dollar is strong, right? The fundamentals are extremely strong, and the dollar is a preferred asset. Trillions of dollars of investment is coming into the United States, and that is what's causing it's causing that. It's this massive migration of capital from other currencies in the US dollar and even out of Bitcoin, when we thought, oh, this is digital revolution, right? It's like, no, right? So here we go. Here is the break here, and we're breaking the rising trend line on the daily chart. We're looking at maybe with a 200 moving average, we broke. There is some support. If we use Fibonacci, which is a way of measuring levels, and we can see that we broke this 23% retracement. Next move, we're at 0.6934. So look for a move down to 0.6742. That's another 200 pips. Let's drop it down to a 4-hour chart, right? We might see a little bit of a rally. We see some buyers step in. Maybe we break the trend line. Maybe we get back to the 200 moving average. But we're looking to short any rally, right? We're in a downtrend channel. Again, we actually have an indicator for that, right? There's the adaptive trend finder, right? So we're in this downtrend. We're hitting the top of the trend. So this trend could lead farther, bigger move to the downside. Bulls versus bears. We are bearish Aussie dollar. Right, okay, let's keep it going, keep it spicy, keep it moving, and let's see what we're going on. Let's go over to, Kiwi dollar is going to be about the same. I can walk it down from there, but Kiwi dollar is in its own kind of throes of falling there. I won't spend too much time on it. It's right across the Tasmanian Sea, and they are, it's the currency is going to look to fall. We've got support 5,500 area. Couple of tweezer bottoms though. 2 wicks is kind of bullish, so we might see some type of little rebound. And we do have a rising trend line, a minor trend line here on the weekly, and we need to break support for this to resume its bearish move. And so we do have support there, but I say it's like running in front of a streetcar to grab a dollar. The overall tide is down, and so we want to be able to see a move higher before a drop. We want to see a pump and dump, right? I'm not talking about the beans I had for breakfast this morning, but a pump and dump, right? You got to pump it up and then dump. That was what we look at for, pump and dump, right? Bearish, we're bearish on that. Bulls versus bears. We are bearish the New Zealand dollar. All right, let's go ahead. We looked at gold already. Let's look at oil. Oil or U.S. I'm only looked at the UK oil, U.S. oil, U.S. oil, West Texas Intermediate, black gold, Texas tea. Right. I'm gonna remove all these drawings and let's get over to the monthly chart, and we can see that we were in this, the war brought prices up to a high about 120. Now we're about 69.02, and so this is, bearish. It's kind of a pseudo double top, but there's lots of resistance here, right? We didn't get, the highs of 2011. We didn't see higher than that. We didn't close with those highs, and we didn't close here. So we have this kind of a rectangle that we're in, we're in this rectangle, a big range. The bottom of the range comes to about $33, right? We could see $33 barrel, but look down here. This is where oil actually went negative. It was negative. It cost you money to hold on to it. They charge you storage fees, and oil was negative 47 cents a barrel. It went all the way up to like $130 a barrel, and then now, hey, there's drill baby drill. A lot of oil coming. Iran for the first time is being able to sell oil in the open market, and so now you have extra oil that we have coming online before the war, plus all the local the domestic oil producers in the United States. The United States has become the leader, the number one exporter of oil, above Saudi Arabia, above Russia, and so above Canada. So now you have all this extra oil plus Iranian oil. So, and we've been embargoing or boycotting Iranian oil for decades. So now all this new oil comes on. That oil wasn't online back here when we went negative. We're going to have all the fracking oil, all the oil from coming through the Straits of Hormuz, all the stuff that's backed up, and you have Iranian oil. We could see $33. I'm bearish. I don't even have to go down to a lower time frame chart. I am bearish oil. Yeah, we could see $33 real fast. Okay, and we're gonna go. Let's do Bitcoin. And Bitcoin is versus the dollar, right? Let me remove all these drawings, and let's go here. You remember all these things: oil is versus the dollar, gold is versus the dollar, the euro is versus the dollar. Everything is versus the dollar, and the dollar's like going, "Is that all you got? Come at me. You want a piece of this? You want a piece of this?" And big slap down, bam! U.S. dollar just smacks down, right? It was just a big. We have a smackdown of all the other currencies versus the U.S. dollar, right? Whether it's Bitcoin, whether it's gold, whether it's silver, it's a big slam dunk, a dunk fest, right? Okay, so let's go ahead and go to our we got the monthly on the Bitcoin, and we do have an uptrend. We still have an uptrend. The uptrend has not been violated yet, but it's getting really close, guys. That's our first trend, and then price got a little bit more excited, more volatile. The trend line steepened. We connect these are speed lines, or speed line, and that's where we are. We connected these two lines to project, and we're sitting right on. Let me get rid of this indicator here. Okay, don't want to delete it, right? Anyway, we have downward movement there, right? And we move to a weekly chart. So we're seeing some wicks, so some nibbling. The wicks are buyers. These are buyers stepping in. They want a little piece, right? They got a little harami pattern. We have multiple tweezer bottoms. So this could be short-term bullish, right? But I don't know. I mean, we have support down here in this 50,105 area, right around this is the low of like August 5th, 2024. I think we tagged that, right? We broke below the 200, didn't hold. The trend line is in question right now, and there's support at the like 50,000. But if we break that, then it looks pretty, pretty grim for Bitcoin, right? We're sitting also at the 618, 56,961. This is a powerful level, the 618. I make it gold. And usually there is some type of a bounce here, right? So we could see a bounce in this area, right? Bulls versus bears, I am cautiously bullish. It gets one cow. That's all it gets, right? But I think if we break this 57,000 area, 57,316, we head down to, we're going down like 40,000, right? So yeah, so that's my take on the bulls versus bears, and so let me go ahead and show you a couple of things we're working on here with the $50,000 challenge. Right now, most challenges, if you deal with them, they do not help you. They charge you money, and then they put you into a demo account. You spend some time in the demo account, and you got to make 8% from $50,000, which doesn't sound like a whole lot, but really, you can't lose any more than like 8%, right, or 6%. So you're really not trading with $50,000. You're only trading with $4,000. But yet they want you to make 8% on $50,000, which is $4,000. So really, what are you doing? You're making 100% return. They expect you to make 100% return because you can't lose any more than 4,000, right? So that's all you have to work with is 4,000, and they want you to make 4,000, right? So they don't even. So and then you don't have support. You don't have tools like AI tools. You're on your own. You have to have your own system. There's no one to help you, no one to hold your hand, and so you fail, right? So can you imagine going on America's Got Talent or something, or American Idol, and you don't know how to sing, right? And but if you win, you get this $1 million record contract, but you don't know how to sing, you don't know how to play the guitar, and you have no talent, right? But you just sign up and you pay $200 to actually, let's say, I don't know if they charge to audition, but let's say you had to pay $200 to audition, right? Well, it's a losing game, right? But the $50,000 to $50,000 challenge, which I have in our school community, we have our own challenge where you make 50,000. We take $50 and we can scale it up to $50,000 using a compounding spreadsheet. Our compounding spreadsheet, you get to compound, to different levels, right? So you start at $50, and then you try to make $10, right? And then we get to $10, you get 60. Then you go from 60 to 72. You go, well, Greg, that's not a lot of money. That's like a waste of time. I tell you what, if you go with a regular challenge, you're trading a demo account. And you can make this money, but you can't keep it. It's just a demo. Because unless you pass the challenge, it's nothing. Here, this is your own real $50 account, and you're trading in increments that scale up over trades, right? So I've had a student or a challenger take his $50 and he ran to $300. Well, the challenge is only like $900 for the year, right? Or we're having lifetime for $997, right? Normally it's $127 a month, but we're gonna save some people some money. We're gonna save them like $400 or $500 by giving $997 for the year. And guess what? You get to work with me for a year, and you might make $1,000 this month. You might take that 1,000 to 5,000 the next month. You might take that 5,000 to 15 or 20,000 the next month, right? So we have we have people on day 20, right? I had a guy on day 20, he made like $1,600, right? But he started with $50. If he loses $50, right? But let's say you stopped or whatever, and you need to draw the money out. It's your money, right? In the regular challenges, you can't draw the money out. We say, Greg, it's only $50. They're going to be a $50,000 account. Well, I'll tell you what. Let me tell you this. Depending on where you live, you have a 500 to 1 leveraged account, which means your $50 acts like $25,000 with leverage. So that $50 is not $50, just like your $50,000 is not $50,000, it's really $4,000. Your 50 is not $50, it acts like $25,000. And using that leverage, using that power of leverage, now leverage is a dual-edged sword. It can magnify gains and losses. But we are able to scale up accounts. We have people scaling up accounts to $50,000, $60,000 by compounding one trade, one system, one trade, right? So we keep it very, very simple. That's the samurai sword. That's the samurai. I think we just our samurai trade. I think it triggered something, right? But yeah, I want to teach you that strategy. I want to be able to help you with that, and you can join our challenge. So if you'd like, click the link in the description to learn more. If you come over to the Samurai Sword or the $50,000 to $50,000 challenge, if you come to that, if you go there, you'll be able to see a video, a webinar that explains how the challenge works, right? And then in that way you can understand, right? And Oh, okay. Uh-oh. Okay. Cancel. Okay. No. Let's go back here. Go back here. Okay. Cancel. All right. There we go. Okay. So, yeah. Let me go to. Yeah. Let's see. Everything went kind of dark there. Right. There we go. Yeah. So here we go. Come on. Don't be shy. Don't be shy. I said. The computer is sorry, acting a little. So here's the 50,000 K challenge there. There's a video here you can watch. All right. Go ahead and click the link in the description. You watch the video, and you can see that we have one proven strategy, the Samurai Sword strategy, with one indicator. We have a money management system, the compounding blueprint that I showed you. Powerful 31 trades to $50,000 using precise position sizing and risk management. Okay. And we use something called HAT, high asymmetric trading, which means we risk very little to make a lot. 5-to-1, 6-to-1, 10-to-1 risk reward, and that way you only have to be right 50% of the time. So you can have a couple of losers, a few losers, but still your winners be much bigger than your gains, right? I trade with you. It's built-in risk management. You can trade with me from 7 p.m. to 9 p.m. during Asia hours, Tokyo session. Tuesdays, Wednesdays, and Thursdays, I get 2 hours of my time each day, 3 days a week. That's 6 times 4, 24 hours. I work with you, and you get to look over my shoulder, look at the trades I take. You can take them too, or we can discuss trades, right? So you're disciplined, focused, execution. You keep 100% of your profits. You don't have to share them with the prop firm, right? And you're profitable right away. From day one, if you make a profit, you can withdraw it if you want, right? And then, so this boosts your confidence with 80% win rates, no restrictive challenge rules. You have a VIP community support, and it's faith-based, right? We pray before every trade, right? We pray in the name of Jesus Christ, because it says, seek ye first the kingdom of God, his righteousness, and he'll give you the desires of your heart. So that's the $50,000 to $50,000 challenge on School. You can go to school.com, 50 to 50K challenge, and you can join. $9.97 lifetime access for founders. The sale ends on Monday. Then it's going to go back up to $14.97 for the year, right? So this is a way you can become a founding member of our newest community, the Samurai Sword, and you get access to our AI tools here. This is our Samurai Sword ORB opening range breakout. Isn't it beautiful? Isn't it beautiful? It's a high-tech dashboard which shows active breakouts, right? And gives you, so we can look at a breakout, we can click it, right? And we can take a look at it, and we can see that price broke. It shows us our entry, our stop direction, the size of our lot, our risk, $5 of risk for 230 ATR. I mean, that's pretty powerful. We actually took that trade, and we actually made money on that trade. Let me show you. So this was the gold. This is the Samurai Sword. This opening range breakout. We took it, and then what happened was we risked so little that was able to move our stop into break even. Not break even plus $19.75. So if we got stopped out, we would make $19.75, isn't it? And then we limited out for $30.34. We hit our target, and we made money, right? Which was pretty cool, very cool indeed, right? And so that moved us down our spreadsheet. And so, with the Samurai Sword dashboard and some other AI tools you have access to, right? This also has a built-in signals service that's built into it, right? This has our signals, our dashboard, we have picks. We have an AI called Kenji. Kenji is our AI coach. which actually answers any questions about trading and can help you, modify, learn about risk management, trend direction, if it's a good trade. He has trades that come up when we have the market, the open market, right? We're in London right now, and so we've got that going on too. So in fact, here is Kenji. He has a couple of top picks right now, right? We can take a look, and the opening range breakout is starting, and so there we're right at the beginning of the London market, right? We're about an hour into London, and we can see that we have a possible move, 102 pips. We're looking to capture 25 of those pips at the opening range. We're right there at the very beginning, right? So this is a powerful system that we have developed here, and we have other AI tools, the Trend Spotter indicator as well. Trend Spotter looks at the individual currency strengths, and that's another powerful tool that you get lifetime access to when you take advantage of lifetime with the samurai sword and our wonderful strategy. We're also going to use. We have the walk of the 7 samurai virtues that tie in with we tie those samurai virtues in with each other to actually with biblical scripture, right? Make level the path of your feet, ponder the path of thy feet, and let thy ways be established. And we have a scripture to keep us centered in our mind. So not this is a faith-based, focused, mental. We work with trader psychology, but also with trader integrity. We believe on the inside. You work on the inside, and it projects your outer success, right? So anyway. I hope you found this helpful. I look forward to seeing you in the Samurai Sword Dojo. Go ahead and click the link. I'll see you on the other side. My name is Greg McLeod from Elite Traders University, a 30-year Forex trading veteran, to a former trader on Wall Street, here to serve you. Happy trading, peace and pips. Bye now.